Good day, everyone. You're welcome to my YouTube channel. It's actually a very new YouTube channel, so do well to like, share, and subscribe as I'll be dropping values. I'll be dropping a lot of values. Good day, everyone. You're welcome to my YouTube channel, GPY Gypsy channel. And I'll be dropping my weekly outlook on a few pairs. Kindly stay to the end of the video, like and subscribe. It's actually a very new channel, so without further ado, let's get right into it. I would be removing all these drawings so we can start afresh. So the first pair we'll be looking at is GBPJPY. So what's happening on GBPJPY? We have our weekly price action like this, because I do start my analysis from the weekly to get the overall trend of the market. So presently we could see the market is making series of lows, series of highs, lows, and highs. So where was our last break of structure? This was our last break of structure right here, and then this was the support level that was tapped. This was our liquidity here, which was swept by the retracement. So this is our new trading range on the weekly time frame. So most of our trades execution should be buys because our weekly is buying. So then what do? We go next to our daily time frame, which it's supposedly bullish too, which is quite bullish because we had markets react from this demand level to take out liquidity from here to confirm this as our high. After this confirmation of high, market took out the high, retraced a little bit, then reacted off of this demand to further push price to the upside and to create another high after taking out this high. So our next daily point of interest will be this demand zone right here. However, while we are waiting for price, it is necessary to know that we could also see some clean trades in this retracement, because if you look at it very well, the daily order flow got shifted after this low was violated to confirm this high. And what happened? Market retraced back into this daily imbalance here to push price further to the downside and take out this low. So of the same impression, market left a gap here also for potential sales. So we'll be expecting markets to tap into this zone, then dump to our demand level. But we don't trade on the daily time frame because we are not bank, all this Federal Reserve and all those stuffs. So we'll now go to our next time frame, which is 4 hour. The shift in the order flow confirms the bearish trend of the 4-hour time frame. And how? This low was a strong low because it took out liquidity. We are expecting markets to respect it, but unfortunately there was a full body candle close below this low, which implies that the market is ready to start selling, coupled with the fact that there was also a supply level here that pushed price further to the downside. However, everything along this side has been mitigated, but we know we have our daily imbalance around this side. So this will be our next point of interest on the 4-hour time frame. So this will be our strong high on 4-hour. This will be our strong low. And how do we confirm this low? Market took out the last high that was created, which was this right here. After taking this out, we know that okay, reversal is what? Imminent. And we could also be expecting that markets might react from here, which is quite valid. However, there is no imbalance here on the daily. So we had this imbalance around this side on the daily, and we had an unmitigated supply zone here waiting for us to get tapped. So we are likely going to use this high as the liquidity to protect our supply, which is still yet to be untapped. However, this zone would also still cause some reaction to price, which is what we are seeing presently. If we go to our 1-hour time frame, we realize that market is likely going to retrace into this flip zone here, because this is a flip zone. This is a flip zone. Market reacted off of this breaker. This is a flip zone. So we'll be expecting market to do something like this. Consolidate a little, tap this imbalance here, then boom to the upside before we now further sell. Or markets should just go straight into our 4-hour supply and then dump to the downside. If you understand the concept of range structure, which I can do further videos about in the future, we realize that even though this high was a strong high to push price to the downside, it still got violated. That was because after 3 consecutive break of structure, reversals are imminent. So this is my weekly outlook on GBPJPY for the following week. So now without further ado, let's move to the second pair, because I don't trade more than 2 pairs in a week. So my next weekly outlook will be about gold. And presently, let's delete all the drawings. What is gold doing? Let's start from our weekly time frame. We'll see that gold is very bullish. Very bullish. There was a breakout from this zone here to cause a break of structure to the upside. Market took liquidity before that at this imbalance that pushed price to the upside. Now, after the break of structure, we have an untapped demand waiting here for us. We don't know if markets will eventually get there in the future or not, but it still does not make it less of a demand, because we don't trade on the weekly time frame, so we have to follow the price. Then we go to our daily time frame. Fortunately for us, there is a demand level here waiting for us to be tapped on the daily time frame. How do I confirm that is a valid low? We could see that market took out this initial candle, and before this candle later closed, we could also see that there was a bit of a retracement. So this candle move is our inducement into this demand level. This is a daily order flow, and it was respected, which means our daily is not yet ready to retrace. However, even though it's not ready to retrace, it created a liquidity grab before breaking this high. So, and one of the very key things to happen in taking a POI is that a POI must grab liquidity, and a POI must also break structure. Now, to further solidify your conviction, an inducement must be present above your POI if it is a buy scenario. So now, this low is most likely going to hold. However, what do we see? This low was created later on our daily time frame. So this is let's check the line chart to see there was a pullback there, and until this low is violated, we are still bullish. So what do? We go to our 4-hour time frame. That 4-hour time frame, we realize that markets reacted off of a very valid demand zone, which is this. So this is our new range. This was the last break of structure. This is our new range, and also we could see that this pullback here makes up to 50% level of our Fibonacci. So this is a very efficient price action. So that makes this low a very valid low to take your trade from. And we could see market tapped it the last time. Market tapped into this zone and boom, pushed to the upside. So where was our liquidity? This was our liquidity resting right here. Then what do we do? Because if in case we're not able to get tagged here, in case you don't trade on the 4-hour time frame, you could as well go to your 1 hour or 30 minutes or 15 minutes to get entry. So how do you do that? You go to your 1 hour, look for the last price action, last efficient price action. We could see that this low is very weak. The candle did not close above it with a full candle and it did not grab any liquidity, but we have a very valid low here because the low took liquidity, which was this candle low, broke structure with a full candle also. So we are expecting market to respect that low. However, if market chooses to use it as our inducement, that means we'll be waiting for price to tap into this area of demand again before going to the upside. So we either have markets continue like this one, or we have another scenario where markets come to take out this low to push to the upside. So if neither of this happened, if by chance markets came here and violated them, that means our daily retracement is on the way. Sorry, I don't know what's wrong with my network. So it means our daily is ready to retrace, which means we would be expecting market to come back down to our daily demand to push. And if by any chance this daily demand also fails, that means we are waiting to buy from our weekly demand. And if by any chance this weekly demand also fails, then that means gold is in a long-term bearish trend. But right now, gold is very much bullish, and these are my weekly outlook on gold for the coming week. Thank you very much for sticking around. Kindly like, subscribe and share so that other traders too can get access to the channel. And also I would be going on a challenge. I just got a 50k funded account and I'll be recording my journey on this channel also. I'll create another video about that before the week ends or probably after the trading week to see the progress and know where we are. So thank you very much once again for sticking around. Kindly like, subscribe and share, and see you on my next video. Thank you.